In today's financial world, debt is often seen as a necessary evil, something that individuals avoid, fearing the burden it brings. However, for the rich, debt is a powerful tool. It's used not only to fund their lifestyle but to grow their wealth. Have you ever wondered why the wealthy seem to use debt so freely, while the average person remains cautious? What if the way the rich use debt could be the key to understanding their financial success? While many struggle with debt, the wealthy understand how to use it strategically. Instead of fearing debt, they embrace it. They use debt as leverage, investing borrowed money in income-producing assets that generate returns greater than the interest on the debt itself. But how do they do it? Is it mere luck, or is there a financial strategy behind it? In this video, we will explore the various ways in which the rich use debt to make money, diving into real-world examples and strategies that anyone can learn from. Number 1. The concept of leverage. What is leverage? Leverage refers to the practice of using borrowed capital, debt, to increase the potential return on investment. It's a principle that is as old as finance itself, but it's often misunderstood. Why does using debt to invest seem to work better for the rich than for others? When you leverage debt, you're amplifying the impact of your investments. For example, if you borrow $100,000 at an interest rate of 5%, and you invest it in an asset that returns 10%, you make a profit of $10,000. The beauty of leverage lies in the fact that the investor doesn't have to use their own money. They're essentially using other people's money, OPM, to make a return. For example, real estate investments. One of the most common ways the wealthy use leverage is through real estate. Let's take the example of Robert Kiyosaki, the author of Rich Dad Poor Dad. He made his fortune by using debt to acquire properties that generated passive income. In a typical deal, Kiyosaki would use a mortgage, debt, to purchase real estate. While the property may cost $500,000, he might only need to put down 20%, or $100,000, with the bank covering the remaining $400,000. With the rental income from the property, Kiyosaki could pay off the mortgage and still pocket the difference. Over time, the property appreciates, and the wealth grows. The key to this strategy is understanding that the property is not only generating income but also increasing in value. The leverage allows for more properties to be acquired, further increasing the wealth. How many people do you know who have the ability to buy multiple properties at once, while others struggle with mortgage payments? What's the real difference in mindset and strategy? Number 2. Using debt to fund business ventures. Building a business with debt. Another way the wealthy use debt to generate money is by financing their business ventures with borrowed capital. Most successful entrepreneurs didn't build their businesses entirely on their own savings. Instead, they utilized debt to scale their operations, invest in equipment, hire talent, and expand their market presence. Take Elon Musk, for example. When he started Tesla, he didn't have enough capital to fund the company's growth by himself. Instead, Musk used debt, along with equity investment, to build Tesla into the multi-billion-dollar company it is today. In this case, Musk took on substantial risks, but the potential rewards were enormous. By using debt to fuel the growth of Tesla, he was able to leverage other people's money to create massive wealth. Why would Musk risk taking on debt if he already had millions? Was it because he believed that the return on investment would far outweigh the risk? And more importantly, how many people have that kind of vision and confidence? Number 3. The role of low-interest debt. What is low-interest debt? Wealthy individuals understand the importance of using low-interest debt to generate wealth. The lower the interest rate on debt, the more opportunities there are to make profitable investments. Many wealthy people actively seek out low-interest loans to increase their purchasing power and maximize returns. For instance, the ultra-wealthy often take advantage of low-interest loans, such as home equity loans, to invest in stocks, bonds, or other income-generating assets. The interest they pay on these loans is often lower than the return they receive from their investments. Thus, they're effectively using debt as a tool to multiply their wealth. Warren Buffett, one of the world's wealthiest individuals, is known for using debt strategically. Through his company Berkshire Hathaway, Buffett often invests in businesses and assets that offer high returns relative to the cost of the debt he uses to finance those investments. In many cases, Berkshire Hathaway issues debt to acquire companies, taking advantage of low borrowing costs. For instance, when Berkshire Hathaway bought the railroad company Burlington Northern Santa Fe, Buffett used a combination of debt and equity to finance the deal. By using debt at a low cost, Buffett was able to acquire a profitable company that generates steady cash flow. This is a classic example of how using low-interest debt can help the wealthy build massive wealth. What if you could access capital at extremely low interest rates? Could you start a business or invest in assets that would provide you with more money than you're paying in interest? How might that change your financial future? Number 4. Using debt for stock market investment. Debt for margin trading. In the stock market, the wealthy often use margin trading to leverage debt and increase their investment returns. Margin trading allows investors to borrow money from a broker to purchase more shares than they could afford with their own funds. While margin trading carries risk, it can also amplify returns when the market is favorable. For example, let's say an investor wants to buy $1 million worth of shares but only has $500,000. By using margin, the investor can borrow the additional $500,000 to complete the purchase. If the stocks appreciate in value, the investor can sell them for a profit and repay the borrowed funds, keeping the excess. The Rothschild family, one of the most well-known wealthy families in history, is a prime example of using debt for investment. They made their fortune by leveraging their banking empire to finance various ventures, including stock market investments. By using their vast network and access to debt, the Rothschilds were able to amass substantial wealth over generations. What does it take to be able to use debt in such a high-stakes environment? Is it the willingness to take on risk, or is it the knowledge that the returns can far exceed the debt taken on? Number 5. Debt as a tax strategy. Tax-deductible debt. One of the lesser-known advantages of debt is its potential tax benefits. In many cases, the interest paid on business loans and mortgage debt is tax-deductible. This creates a scenario where the wealthy can use debt to reduce their tax liabilities, allowing them to keep more of their income and reinvest it into wealth-building ventures. For example, if an individual has a significant income, they might use a loan to acquire an income-generating asset. The interest paid on the loan could be deducted from their taxable income, effectively lowering their tax bill. This allows them to keep more money, which can then be reinvested in additional income-producing assets. Donald Trump is another example of someone who has utilized debt as a strategic tax tool. Throughout his career, Trump has used debt to fund real estate projects while taking advantage of tax deductions. By using debt to finance his developments, he has been able to lower his taxable income and reinvest the savings into further ventures, which have added to his wealth. If you could reduce your tax burden by using debt strategically, would you consider it a smart move or a risky gamble? Could tax savings really be the key to unlocking more wealth? As we've seen throughout this video, the rich don't just tolerate debt, they strategically use it to create wealth. Whether it's through real estate, business ventures, or investments in the stock market, debt can be a powerful tool in building financial success. But it's not just about borrowing money. It's about knowing how to use it effectively, understanding the risks, and being prepared to leverage opportunities when they arise. What distinguishes the wealthy is their ability to see debt not as an obstacle but as a means to an end. They don't use debt to live beyond their means. They use it to invest in opportunities that will bring a return. The real question is, how can you use debt to achieve your financial goals? Are you ready to leverage the power of debt to create wealth, or will you remain cautious and leave these opportunities to others? By understanding how the rich use debt and applying these principles, you too can start building a more prosperous financial future.